I want to show you guys the two best possible trades that you could have took today on FOMC. This was the PM session, and one trade was just after Powell was speaking, still during when he was speaking, and the other one was at end of day. So, in order to determine where we were going, this is what I was looking at. We had this 5-minute consolidation all through the morning session, and then even into the afternoon. But we had buy stops ran, or sell stops ran right here. So we have turtle soup. You can see the explosive move back into the range. And we have SMT between ES and NQ. You look at ES, it looks like the exact same. A lot of consolidation all through the morning session into that PM session. Sell side liquidity right here swept. SMT 450 low taken by ES, and it was protected by NQ. So now you can understand that this low should now be protected if you are on sides. More importantly, after this SMT and sell side liquidity, you get a bullish change in the state of delivery right here. All that means is you are now transitioning from the sell side of the curve to the buy side of the curve, or the sell side of the curve, or the buy side of the curve to the sell side of the curve. In this case, we are anticipating bullish prices. Why? The 4-hour was telling the story the entire week. Bouncing from this down closed candle inside of this 4-hour fair value gap. On the 1-hour, you can see it's even cleaner. Turtle soup some of these lows. We're sitting inside of this 4-hour fair value gap right here, and we just turtle soup these lows as well. So that is why I was looking for this high, and this high, and then eventually all-time high. But this trade setup was absolutely beautiful. So this is what I was looking at. Now we understand that we're looking for bullish prices, and we have our internal buy side liquidity up here, this high, and then this high of day. And if you look at the 1-hour, we have this cluster of buy stops up here at 428 and a quarter, and that's where my last contract was trimmed at on my long position. So I did take 5 micros on this setup. We have buy side or sell side liquidity swept right here, and more importantly, we now get that 1-minute change in the state of delivery. We have a inversion fair value gap right here. Bearish fair value gap gets violated, and if you play price one more time, this one also gets inverse up here, and we have now a bullish order block plus OB, and we also have a regular fair value gap in here as well. And that is where I took my entry off of. Actually, not here, the one right there. That is where I took my entry off of up here. Fair value gap. And this is what this trade setup was looking like. So I was anticipating this order block and this inversion fair value gap and this fair value gap up here to all be held, and then our targets were this high, and this high, and then that 28 and a quarter level. So if I play price, that is where I got filled, and my stop loss was at this open of this candle right here. That's where my stop loss was. You can see price is using this order block as well, this smaller fair value gap, and you can see that price uses the wick of that candle perfectly. That's also why my stop loss was here. I did not want to see the 50% of this wick get traded through, and you can see the rest was history. So I did take 5 MNQ, so the micro. I scaled 3 at this high. This was 33 points. I scaled 1 contract up here at high of day, and then my last contract was scaled up here at 28 and a quarter. And I did take a loss inside of this price leg. I did try to short here into this these 1-minute equal lows. I did get sucked into these 1-minute equal lows, and I didn't see the SMT at that time. So that's also why I should have never been looking for a short setup in the first place. just because of that SMT. There is no reason for price to come back into this area before displacing higher. You can see that we just have another leg of accumulation. This is our manipulation, and now we get our distribution as well. So I wanted to add that after the high of day got taken, I did move my stop to break even, and that didn't really matter. I still got my last contract off up here, and I ended up break even on the day because this trade here I lost $400 on, and then this trade I made a little over $400 on between the 5 micro NQ contracts. I do want to go over this last setup. This was the end of day setup that I was talking to you guys about at the beginning. This was a bread and butter ICT setup. This is absolutely beautiful. This is exactly the kind of trades that you want to be taking if you do study and want to trade ICT's concepts. So we had our liquidity 28 and a quarter, and this was our next high up. And this entire area was at one point a liquidity void until we got this high. But the way price works is that this high is now protected until these lows are taken. So these lows were taken. Now this high is now unprotected, and price is going to distribute back up or expand back up into this high, because that is where price is at a fair value for buyers and sellers, right? How do you know if price is at a fair value? You see how there's this big, large fair value gap that was semi-filled here, and then, like I said, we sold off. Now price is going to reprice into this order block and the rest of this fair value gap to balance this entire price range, because that's all price does, right? Price just moves from inefficiency to balance price ranges. So this setup occurred on the 1 minute, and this was not taken yet, and this is what I was looking at. So I did actually get out a trade at break even as well inside of here. I got filled at 45. I got out at 47. I was trying to short this into these lows right here. Let me get rid of this line. But I understood that I was offsides just because the price was still in bullish order flow, and we did have these clusters of buy stops on the 1 minute and this 506 level that I was looking at as well. And the 5 minute, we were just bouncing from this these down close candles in here. So whenever you see kind of like this action, there's no reason for you to short that until we get a closure below these few last candles right here. That, at least that's how I traded in my head. And you can see that we have a 2 minute fair value gap that price is bouncing from. So we have that 2 minute fair value gap, 3 minute order block, or 2 minute, however you want to look at it. It's all fractal. We also have this 1 minute fair value gap that price was sitting inside of, that I was looking at as well. So this is all that I was waiting for. So I'm going to get rid of this, and I'll highlight this 1 minute fair value gap because that's where price ended up respecting the cleanest. So you can see we're bouncing from this 1 minute fair value gap. We understand that we have this 2 or 3 minute order block. Doesn't really matter however you look at it. We'll just say the 3 minute. Inside of this 3 minute order block, still have liquidity above, engineered buy stops above as well, and we're at that 350 macro, at a yawn. And now we get our bullish change in the state of delivery rate here. We have a closure above this last series of down close candles that took out liquidity. It doesn't have to be a swing low. It can be a run into an inefficiency like this bullish fair value gap that is also a run on liquidity. There is sell side liquidity inside of there's internal liquidity inside of a bullish fair value gap. So we get a candle closure above the open, and then we also, if you don't want to trust the change in the state of delivery, we do get a market structure shift right there as well. So you don't need a candle closure above for a market structure shift. A lot of people think you do. You can if you are newer and you're waiting for extra confirmation, but we get that here on this change in the state of delivery, and we get a market structure shift. More importantly, we do create a 1 minute fair value gap, And so now these 3 down close candles are your bullish order block, market structure shift, 1 minute fair value gap is supporting price. The entire higher time frame from the daily, 4 hour, 1 hour is all bullish, so we are anticipating higher prices. And our main objective is this 507 level. And low hanging fruit is right here. And of course high of day, which is 3 equal highs pretty much. ICT says jagged lines like to be made smooth, so that is exactly, or smooth lines like to become jagged. I said that backwards, but you can see how clean these highs are up here. And the low risk buy is inside of this fair value gap, or you literally could have just market bought the change in the state of delivery, stop loss at this low. Why is this low protected if you're on size? Because you can see the entire fair value gap is filled. You can see this candle goes through the entire fair value gap, and it doesn't have to close above it, but it does. It closes above that as well, so you can see that is a turtle soup, and we get that. And we get this entire inefficiency filled, so now this should be your protected swing low before some form of buy stops are ran. So if I play price, you can see that we get our tag in there, we get our explosive move back up, we get another market structure shift telling us that price is on our side, we are in sync with the market. And if I play price, you can see what happens afterwards. You get your first TP hit, and then the second candle hits the high of day, and the rest is history. You even get that 507 tag and price. This is what happens when that 350 to 410 macro gets hit. You can see what happens to price. We kind of just fly as well. Time and price, very important. Little things like this, you're able to catch monster moves. From here to here, 28 points. From here to here, 38. From here to here, almost 50. So if you can't make money like that, then you obviously have a risk management problem. But these are some really nice moves. This is an absolute textbook trade. The higher time frame aligning with the lower time frame. You get your market structure shift, change in the state of delivery. You get your your ICT 2022 mentorship model right here. And you have your low hanging fruit targets and your liquidity above. Hope you guys enjoyed this video. This is my thought process through the entire FOMC afternoon, and those were the trades that I took. I did not take this one, but I did tape read it, and it was absolutely beautiful. Hope you guys enjoyed. If you have any questions, comments, concerns, let me know in the comment section down below, and I'll see you in the next video.